These are some single-family homes down in Katy, Texas, okay? If you've never heard of Katy, Texas, that's okay. Don't you worry. More of you will probably be familiar with Houston, okay? It's a little suburb in the Houston area, right? Why do people move to Texas? Well, because it's friggin' warm, number one. Number two, there's no freaking state income tax, man. How dope is that, right? You got all your tenants up in there. They get to keep all that money, right? If you'd like an extra $34,000 to put into your pocket, you're going to want to take a look at the deal I have for you today, folks. This one comes to you from my friends at Rent to Retirement. These are some single-family homes down in Katy, Texas, okay? If you've never heard of Katy, Texas, that's okay. Don't you worry. More of you will probably be familiar with Houston, okay? It's a little suburb in the Houston area, right? Rent to Retirement. You know, they're all about getting you set up with properties that are being newly built, okay? So you take major metropolitan areas such as the Houston area, and then, you know, you go 30, 40 miles out, and then you got extra land, and then boom, you're getting all the new communities, all the nice little cul-de-sacs nicely built, and that's what you're going to get with this particular one, right? Price $286,900, and as of right now, they are offering $34,428 in investor incentives to you. You could utilize those incentives in a myriad of ways, okay? You can get cash back at closing. You can get free property management. My personal favorite, though, is you could utilize some of the money to get a mortgage rate buy down, folks. You can get it as low as 5.375%. Where else in 2026 are you getting an investor non-owner occupied loan for under 6%, right? This is under 5.5%, okay? I bought a house in like 2009. I think that was my first house I ever bought, 2009, and my interest rate was 5.5%, right? So who would think that somebody can get a rental property? That was an owner-occupied property. That was an FHA loan. Who would think in 2026 you can get a rental property loan at a lower rate than I bought an FHA owner-occupied home for in 2008 or 2009? One of the two. I don't know. What's a year, right? Amongst friends, okay? Not only that, folks, this bad boy, dude, is in Texas, bro. You guys know Texas is one of the best real estate markets, right? Texas is a place where more people move in than move out. When more people are moving in, you know what that means for you? That means the value's going to go up. The rent, it's going to go up, right? You're going to make a lot of money over the long haul, right? So you get the 30-year mortgage fixed rate, 5.3, and you got a whole bunch of people moving in. Man, why do people move to Texas? Well, because it's friggin' warm, number one. Number two, there's no freaking state income tax, man. How dope is that, right? You got all your tenants up in there. They get to keep all that money, right? They get to keep that money for themselves. Uncle Sam isn't in there taking their money, right? And Uncle Sam, you know, the government is not going to bother you as much because you're in Texas, right? Imagine being a landlord in like New York or like New Jersey or anywhere in California, right? That would suck, right? So what you want to do is you want to focus on red areas. You want to focus on areas where they're landlord friendly, right? They're friendly to you, and then they're also going to be friendly to your tenants in a way that doesn't negatively affect you, right? You get places that are super friendly to your tenants like California, that's no good. But you get a place like Texas, they're friendly to you. As far as you being the landlord-tenant relationship is in your favor, but they're still friendly to the tenant because they don't charge them income tax, right? So they're happy in a way that doesn't hurt your feelings or make your job as managing the rental property and collecting that money any harder than it needs to be. That's why Texas is one of the better markets for investors out there. That's why Rent to Retirement is targeting this particular area for investors. Several properties available. You can get those credits. You'll be able to talk to a Rent to Retirement representative about exactly how you want to use that $34,000 should you make the purchase of this or some similar houses they have over there. They got a few in the market. Very, very similar to this one. Similar rental rates. You're going to have to talk to your Rent to Retirement rep specifically about what's available because these are going pretty quick. I would imagine they're not going to last very long. So talk to them specifically about what's available and how you can use the credits. Again, you can get free property management. You can get cash back at closing. My personal favorite, though, and I think you're really missing the ball if you don't take advantage of this, is to use the mortgage rate buy down. That's how you're going to make a massive amount of money over the 30-year length of that loan, especially with it being like a place like Houston where that rent's going to continue to go up and up and up and up, and your mortgage is going to stay very, very low, right? You're locking in a mortgage rate that's lower than rates were in 2008/2009 when I got started in the game, folks. Reach out to them for more information. Their info should be on the screen. If not, click the show notes below.
Thanks for watching. Subscribe to Holton Wise TV for more financial information, education, and entertainment.